4 minutes to the top of the hour. Welcome back to Morning Exchange. Time now to chart the markets. Our next guest is bearish on crude and foresees NYMEX touching the $48 mark within the next 4 weeks, if it remains underneath 60.25. Alex Benjamin is an independent technical analyst. Joins us now in the studio. Bit brave, sir. $48. What's that based on?
We have an island, one-day island in the chart, which means that there's a gap on the left-hand side and a gap on the right-hand side. And islands, if they're left unclosed, actually have very bearish implications.
Is that a very reliable signal, Alex?
It can be at the top of the market. The question is, are we at the top of the market? And of course, that's why I say the proviso is that for as long as we remain closing underneath $60.25, then the path of least resistance actually is lower, completely in the face of all of the bullish prognostications that we've been hearing about this morning.
Have you been bullish all the way up on oil?
Yes, there's certainly been a very good case for being bullish on oil. But clearly, once we got above $60, there was an element of capitulation. The media became very, very bullish. There was an awful lot of talk about oil going up to $80, even $100, and that may well be possible. But for as long as we remain underneath the $60.25 level and the island remains on the chart, then lower is where we're going.
We did go from 60 to 57 very, very quickly. Could one take a signal that maybe some of the very smart money has got out, or at least taken a lot of money off the table? Or is it just because the price has been so volatile for so many months that that's just the effect we're seeing?
I think that there's an element of money being taken off the table. Certainly any long-term trader who has been bullish would be wise to bank some profits. The question, therefore, is where is the eventual breakdown? Today being a US holiday, today is not a good day to look at oil, because obviously the New York markets are very much in control. And we need to see what happens in the early part of Tuesday and Wednesday. And if we start to get back underneath about 57.30, somewhere around there, then we will take out Friday's lows. We had a very big day on Friday up, and as I say, the path of least resistance at the moment is for lower, and that is totally in the face of all of the bullish arguments.
Okay, what about the dollar move? Do you expect that to continue against the euro?
I certainly expect the dollar move to continue against the euro for as long as we remain underneath 121.25. For the longer term trader who's been short from the break of 127, then the 38% retracement down at 115.90, 116.08 is the target. Too many people focusing on 117.60 more or less. That's too obvious on the charts. We need to take that out. And for as long as we keep in terms of the very short term underneath 120.25, 120.30, possibly 120.40, then again the path of least resistance is lower.
Thanks very much indeed for coming in, Alex. We'll see you again. Alex Benjamin, independent technical analyst. Now, after the break, we head out to Nomura's